Today is Wednesday, March 24th, and we said that there was a possibility, because we were oversold, that we might see a little bit of a pop. And that's what we saw in the morning. We did see a pop in the Dow. We didn't initially in the NASDAQ, and then it popped. The S&P 500 popped. But what really wasn't convincing, and then it just continued to drop off, and then it really tanked in the last 15 minutes, 30 minutes. Decliners led advancers by about 2 to 1, but that didn't do much for the McClellan oscillator. We now have 2 days in a row where we are oversold. Does that mean we get a pop tomorrow? Possibly, but all the pop is going to do is, bring us into this area right here. We're going to go back and take a look at this one here. We can really stay in this oversold area for quite some time. And look at this complex pattern that we had back here in the fall of last year. And what happened to the market in that time? It was sort of, you could draw a channel through there, and then it dropped, and then it picked up. And then we had another drop, which was followed by this complex pattern that was really quite bullish. So just hang in there. There is really nothing wrong with the U.S. economy. There's this talk about the bonds and the flight to safety. I don't buy it. This is just a situation where the Dow Jones was clearly just making ridiculous highs. The NASDAQ clearly has been a big sufferer on the pullback, had a little bit of a rebound. We might even be forming some kind of a Gartley pattern here. Let's see if we can't start to identify a pattern, and there is possibly a pattern. Let's see what the pattern says. Whoops, didn't want to do that, of course. The pattern says X to A to a perfect B. That's a perfect Gartley, 61.8%. And not only did it stay up there, but it stayed up there for 3 days, testing that point twice. Then it came back into the area, the range that's acceptable for a Gartley. We can still go down, to this point right here. If we went much further, it wouldn't be a Gartley anymore. It would be real trouble. But look at the Chiku span, still above the cloud. The candles in the NASDAQ really took a big drop down. But this calls for the NASDAQ to come back to as much as 1364. So let's keep an eye on that one. Meanwhile, the SPX, we don't see that kind of a pattern developing, but we do see the Chiku span now below the candles. Not a good thing. But having the candles come down to the 50 and the cloud, which are definitely headed for a collision here. In fact, tomorrow the 50 and the cloud are going to collide. And if we were to pull back over in the next few days to 38.73, that would be the top of the cloud. So hang in there. I'm not going to go through many of the stocks. Just want to point out my little ALEC certainly reversed, and any gains that I had, I have lost. But look where the Chiku span ended. It ended on this bullish cross of the 50 crossing over the 200. So let's watch for the bounce off of that one tomorrow. That's pretty interesting. Other than that, the banks did well. My stocks did badly right from the initial turnaround in the market. NEO, Plug, Square, just brutalized. I had a horrible day. My shorts are certainly not making up anywhere near for my losses, but I'm glad to have them. I am not selling stock. I may start to pull off some of my short calls on Monday and wait for a little bit of a bounce to sell more short calls.